The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. Once more into the breach we go, dear friends. The S&P at 1934, we're off 32 points on the S&P cash. Volume has not really picked up commensurate with a 32-point move in the S&P, which is very interesting. Of course, this is the last day of options rollover. Right now, in the next 10, 15 minutes, normally they're done with it, and you start seeing the true direction of the market. But I get kind of a sense out here that there are a few sellers and even fewer buyers today. Everybody's pretty much scared witless. And I can't find a bull on CNBC, which also makes me very nervous. If I could find, 3 or 4 people that weren't total shills saying that they were ready to buy, that we weren't going back and testing the low, I'd feel a lot better. I want to see some other people on the other side of this. What this does tell me, though, is it's the end of options expiration rollover. And a lot of these guys know the game. They probably would like to see the market lower today as they move their option positions in or out. And that also makes me a bit nervous. But, to really get me fired up, I think we probably would like to see some kind of close above 1945 on the S&P cash, so that'd be about 10 points higher. I don't think that would be really tough. The reason why I say that is I've been looking at a ton of stocks. Actually, we were buying some today. Are they going to all turn out? Probably not, but I'm looking at ETFs that have normal volume of 500,000 shares with 55,000, 60,000. And it's telling me that while these stocks are down, and they may not bounce, there certainly isn't a lot in some of these sectors, not all, but some of these sectors. And we continue to see lots of volume in the indexes, a lot less in the ETFs, and a lot less than that in a lot of the stocks. And that's not something normally you have. You had a lot of divergence within it. I suspect that probably some of this has to do with what people are looking at in the dollar. I've been a strong dollar advocate. I thought just about everybody thought that the dollar was going higher. It is smack dab, right on the line, 96.30. If you've been listening to my show for a while, you know that 33.20 in the 93.30 or 93.20, something like that, 96.30 have been this range that the dollar's been in. We're at 43 cents on the dollar index, by the way, on the continuous contract. And we've had the Fed really kind of moderating this market with a lot of manipulation. One of the things that does tend to bother me, and especially when I look at gold today and think that gold could go lower, is a comment about one of the, I'm trying to remember who it was. It was a comment made late last night, maybe 6 o'clock, by either somebody in the Treasury Department. I think it was Jack Lew, who said that we want to make sure that you keep your bargain. I have a feeling that bargain had to do with at least the tone and tonality was about the, devaluing their currency. They actually met last week and signed a deal that said, we're not going to go back and do any more of this stuff for weaker currency. And I'm wondering if they aren't at the edges, just saying one thing and doing another. But certainly, I think if there's anything that can spook the markets today, it is that dollar index right at that 96.30 level. If it were to, let's say, jump the creek in the morning up a buck, I have a feeling that the bears would be fairly justified in seeing a much lower market just on the weakness of the dollar. And of course, the sell-off probably in the major Dow stocks that has already occurred, but he could go much lower. At the same time, of course, you're looking at gold markets lower and gold equities lower today. Not dramatically just yet, but significantly, I would say. Again, probably a byproduct of that dollar. So there are a few things out here that look very interesting to me. Again, the volume is very low. Does that mean anything? The answer is probably no, because the volume could come in tomorrow when the market gaps down. So what we need is some breathing room if you are bullish. And if you are bearish, I think you want to see that dollar go higher, because I think that's going to give you exactly what you are looking for. And that is lower prices, especially in the major indexes. A lot of the stocks that are holding up very well are some of the smaller cap stocks who don't do a lot of business overseas. And I suspect that is at least some little confirmation that something like that's going on. Anyway, I've got a lot of stocks out here that we added today, or about 2 or 3, that I like if we would rally before the close. If not, we will exit stage left with our pride intact. But again, probably without a little bit of room, I'm going to be very difficult to either be long or short going into the close, because it's probably all up to the dollar. Well, anyway, we will continue on and go higher and move forward.
And it's all just a little bit of history repeating.
In 1851, the nascent telegraph industry gets a huge boost as the Erie Railroad becomes the first train company to use the telegraph for dispatching trains, vastly improving the safety and efficiency of rail travel as they get rid of all those head-on crashes, because no one knew which way and any way these things were going. Later on, of course, there was additional developments to allow a train to actually use those telegraph lines while they were moving. That was a big movement, because then they could actually signal, and i.e. why the gentleman in the back of the train is the signal operator. They could either stop, or he could just put his little deals out there and at least make a small message about where the other train was, when they should get close to it, if they had to back up, all the other stuff that normal train business happens. I'm not a big train aficionado, if you could tell. Anyway, on this day in 1851, the telegraph and, of course, the telecommunication business really gets fired up with the first big deployment of any kind of telecommunications infrastructure in the United States. Of course, the reason I am thinking that there is a good possibility that something bigger is going on behind the curtain is because of the Baltic Dry Index. I put this chart in the newsletter to this morning, because to me, we've had the biggest 3-day move in the Baltic Dry Index. Somebody called in yesterday about, I think, the Tom show, about what was going on. There's a variety of factors. Of course, this thing rallied up to 1225, really came off of it kind of hard back down to about 800, but has had one of the biggest moves in, I think, since 2009. I read was the, you had some nice moves back in June, but, this would not be a ABC up. But does that mean that these dry shippers can continue to make a profit? The answer is maybe, but it is a case-by-case basis. The reason why, a lot of these, in fact, I read a couple of them yesterday, and then I couldn't find the articles that talked about them scrapping their ships to get the kind of cash they needed to be and continue on. In fact, they were selling some of the ships that they just bought not too long ago for $20 million, for $7.8 million, if I remember the article correctly. And that was just to keep going on. They couldn't get loans, couldn't get anything else, so it had all to do about it. So you get these shipping companies. They scrap their ships or get rid of a few of them or mothball them. And then, of course, pretty soon someone comes along. If we talked about last week about how the Chinese were actually not only in the country today, but actually really starting to buy, it looked like crude, a lot of discussions about it. And I talked to Andy. It's unclear whether this is filling their strategic petroleum reserve when crude prices are lower, or if they really just need a lot of crude and don't have it now. But they are masters of buying at the lows. And one of the reasons why I thought, even going into last week, that we could have a fairly decent rally in the crude industry. And it may not be on demand, it may be on supply, especially with everything going on in the Gulf. That's why I suspect that the Chinese are loading up right now. But pretty much when I do a little bit more investigation, I find out that a lot of this, almost all of this big pop in the Baltic Dry Index, which is the prices for all these big ships that haul ore and grain, had to do with crude. Very little of it had to do with anything other than that. But that's it. Anyway, I think the gentleman that called in for Tom yesterday was asking about whether or not they had enough cash. And the problem is a lot of these are not very well followed companies, so you really don't know. And maybe they've got cash because they've scrapped some ships, just hasn't made it into their 10Qs and all their other announcements. And that is the problem, especially the same kind of problem you have with gold miners, and that is because they're not followed real well. You can't get a lot of answers on what's actually happening, especially on these micro companies. A lot of these stocks are, pretty low dollar, $2 stocks. Nobody's spending any attention on it because they can't. Of course, if they follow these stocks, what's going to happen? Nothing. They can't sell it to any big hedge funds or anybody else because they all want to own stocks that are above $10. And a Diane is shipping or something like that trades whatever it is, $2, $3, $1 or something, just can't pay the rent for them to do analysis on. So you don't get a lot. But anyway, a huge rip in the Baltic Dry Index makes me think that there could be a following rip in the crude market. And again, not on demand, but on supply, mostly in the Mideast. So you probably would see the bigger effect, of course, in Brent, not in West Texas. But certainly you're seeing, that's a fairly decent move. What are we talking about? Almost a 25% move in the Baltic Dry Index in 3 days. Again, the biggest move since 2009. And guess what month in 2009? March of 2009. Beware the Ides of October and September maybe too. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crisp crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. We've talked about it before, and I am not. Oh, there we go. But I wanted to bring it back up a little bit longer. When Western Digital was topping out in the Tech Insider, we'd been getting short that stock from about 110. I think we'd been in and out of it a couple of times in the Tech Insider, and we had some pretty good runs in it. I wanted to get re-short and just never really got a good signal that I wanted. I probably should have just go ahead and taken the first bounce at 87 back on the 30th of June. But there were a lot of things going on in the market, and I thought maybe the market would just bore us out for the rest of the summer. So I avoided the trades, but we made some good money on it. One of my theses is that Western Digital is a company, and has been since back maybe 6 months or 9 months ago, is a company that is running and will be out of business one day, sooner rather than later. It will be replaced by SSDs, which are hard drives that do not spin. And we've chronicled that in the Tech Insider for probably a year now. I'll have to go back and look. But certainly I laid and set the table for the fundamental reasons why this thing would get walloped, besides the market's headed down. My guess is this is going to continue to be one of these stocks that gets walloped. It is one of the disasters du jour today, that outside of the biotech field. The reason why, a huge sell from some person on Wall Street that is an analyst that has finally woken up to what I knew over a year ago, and that is that spinning drive prices would continue to plummet and die as long as they really couldn't come up with two major answers for their technology. And they keep making hard drives larger, but it's kind of like, we're going to add additional lanes on the major highways downtown. But you know what? We're not going to add any more lanes when we get off downtown. So all we're going to have is a lot more people parked on the highways. And that is the problem with these spinning drives. They really can't get the interface speeds up, the disk speeds up any higher. They've done everything from putting helium in the things to trying to vacuum all the air out of them. But you've got to move the disk heads around. You've got to spin the platters. It's just nonlinear in its design. And there's probably nothing better chronicled. And I wrote about this in the Tech Insider probably a year ago. Probably nothing better chronicled than the demise of hard drive companies over the years. And most of the people in academia, do they have to be nuts? My mom was always loved those academia nuts. Anyway, they have, because the numbers were always published for all the different manufacturers in InfoWorld, starting from about 1975 for these disk drive manufacturers, maybe 1972, they were able to go back and see how introduction of a 5.25-inch hard drive and a 3.5-inch hard drive and a 2.5-inch hard drive and SSDs have changed and where the business was going to and fro. And it's probably one of the better things, but we've talked about a couple of the guys that have been in this sector, or not the sector, but been in this business of talking about innovation and displacements in technology. But a good one, and one that I learned a lot from the books and all the work that people have done over the years. There's nothing so plain as the companies that have been in hard drives going in and out of business. But my guess is that the companies making all the money going forward in this business will all be manufacturers of memory and not of spinning hard drives. It's going to be very tough. They continue to come out with larger and larger drives, but of course, the exit ramps where you get the stuff on and off the drives, not any faster. So it continues to be a problem. Anyway, just thoughts on that one out here today. Let me see if I've got anything else. We're at, what, 1935? My guess is it's all going to be the last 30 minutes of the day out here. It's going to give us that answer if we can get back up above 1945 on the S&P cash. Of course, the longer you go without a bounce, the more likely that the bears will get in and pummel you into the close. Oh, when we come back, we're going to talk about working on cars, something I love to do. Morally, I like to work on motorcycles. But we're going to talk about AutoZone and their earnings when they come back. Pull up that car underneath the shade tree. Just pop that hood and take a look when we get back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. Had a few emails. And of course, you can always email me at PATH, P-A-T-H, at TFNN during the break. They were wondering about where you find these charts or the numbers. They didn't know where to get them. If you can't find them on your system, you can go to Bloomberg or just Google Baltic Dry Index. The symbol on Bloomberg's website is BDIY:IND as an index. But a pretty good indicator of what, how quick you can bounce out here and how far we did off of just the low on the 15th up just a couple of days later. But keep an eye on that, and I think you're going to see at least a good sign of what is happening in that space. But it could put a floor under crude, which a lot of people are trying to get short these days. And I think you might find a few people on the wrong side of that trade temporarily. Maybe not, if we actually get more Russians in Syria and the Iranians shooting at crude ships leaving the Gulf or something, that could change a great deal very quickly. But there's something going on there when you see a move of 20% in the prices that they charge in 3 days. So keep an eye out on that. We were talking about AutoZone when we left, when I digressed. Anyway, this is coming back into its previous high, the August 19th high, 754.90, just 200,000 shares. Not a lot of volume in these stocks, once they get up to these $700 price points, you also don't have a lot of retail traders in these. These almost always end up being 99% of, hedge funds, that kind of stuff. It really doesn't matter what the price of the stock is. It's the percentage move out of it. But what that does do is mean that you don't have to play with a bunch of people that are rather nutty for the most part. They may get squeezed out just like any other retail trader. But for the most part, they don't do overwhelmingly stupid stuff all the time, just on rare occasion. But, this had a nice little pop out here. They had decent earnings. What was that on here? $12.75 per share, 6 cents better than Capital IQ. Cars continue to get older and older on the road. And since they started zinking them and dipping them in zinc for the bodies before they went out, they just don't rust anymore. We've got a lot of cars down here in Florida that are 20 years old. And unless you're driving them through the salt water on the beach, they look to be pretty, hold up pretty good. They all have the sun-blasted hood and roof and trunk. So eventually the paint just is burned off the top of them if they park them outside. But a lot of cars down here that are parked in garages, 10, 15 years old, no real problems. But AutoZone is cashing in on that. And again, you got a lot of people that are looking at new cars, or were. Not a lot of these older cars continue to find themselves. Speaking of that, we were talking over the last couple of days about Volkswagen. And, of course, you had the president of the Volkswagen come out and make a little speech in Germany last night. And, of course, last night also you had the rollout of yet another car from Volkswagen. But I got a little clip of the Volkswagen guy talking about the problems that they had. And, I know it's probably a little bit of translation from German, but this is what I heard.
No, I didn't. Honest. I ran out of gas. I had a flat tire. I didn't have enough money for cab fare. My truck didn't come back from the cleaners. An old friend came in from out of town. Someone stole my car. There was an earthquake. A terrible flood. Locust. It wasn't my fault, I swear to God!
Well, that's what I heard. Anyway, what else do we have out here? Oh, there's some stocks, like I said, that are kind of interesting. World Wrestling Federation, WWE. Like I said, there's some of these stocks are back here without very much volume. WWE kind of took off on the 30th of, was that June? Yeah, 30th of June or July, 30th of July. Nice little bounce out here, 3.6 million shares. And, it popped back into that 3 million shares on the, September 1st. And today we've got the 22nd out here. Very light volume, 306. So there are some stocks out here with fairly standard Wyckoff buy patterns on them. It's just the market that is really starting to make these things kind of come back down. Now, like I said, if you can get some kind of bounce out of here, a lot of these stocks are going to both be highly short. And, of course, they're also going to be very washed out. And if you had a seller and he hasn't sold already, it's going to be a lot tougher than it has been before. Trading out at 1937 on the S&P cash right now. Again, I'm looking for 1945 into the close today to say that we've retested this low, and we're probably going to bounce back up to 1970 on the high end of this market. And maybe just the last day and a half have had a lot more to do with options rollover than any real huge movement. Maybe it was an excuse yesterday and today. Anyway, I don't know. I'm not a big fan of WWE. I don't watch it. I do bump into Hulk Hogan many times, especially on Fridays when we go over to the TFNN studios, and I do it in studio. There's a small place on the corner just down from the studio that details cars. And he seems to always get his car out of the detail about when I'm driving by and tries to gore me with his 68 Charger. It's a yellow and black one. But I think he's been thrown out of the WWE, isn't it? Anyway, I do wander away from my chosen thoughts occasionally. Other stocks of interest out here. Wanted to see how some of these stocks that were going lower. Trimble Navigation, I talked about these GPS companies. Very hard to figure out how these guys, in a world where GPSs are now in chips and in watches and everything, where you're not literally buying a device that says Trimble on it anymore. I know they still make money on licensing and patents, but certainly not like they did when I've got probably two handheld GPSs for offshore. But I don't know if there's a lot out here other than these companies going lower and eventually lower until they become a $5 stock, and all they do is take cash in from their patents. It's hard for me to see anything. Had some people ask about it over the last few days. And you do have a lighter volume, which is what I was interested in. You got on the 24th, they're not, like I said, there's not a lot of stocks that have blown through the previous lows of that 24th of August. But you had 4.6 million shares that day, last 3 days, 4 million shares, 2 million shares yesterday, and today 1.3 million shares. So again, some of these stocks are giving me pause to say that we're going to jump the creek in the morning. Also, some of the other ones out here that look on a long-term basis that may be doing something. Been watching Kohl's out here. The February 5th, 2014 low is $47.12, 2.4 million shares. We're certainly into those gaps and into that candle. We just haven't tested it yet. We're probably talking about another, well, we're $1.15 down, something like that. But at that point, we're going to start seeing some of these stocks, probably going to have fairly massive support in Kohl's and some of these other ones. I think I saw, was it Macy's? Was that MCY or just M? Just M. This thing's back to a long consolidation range. It has a little farther to go. You got a big gap out here at about 45 bucks. Would not be surprised to see this thing eventually fill it. But as we go over to the right side, there's a lot of congestion out here at about this level, over 50 bucks. But, if you were going to buy it, I think you'd have to wait till you were 45 or in that $45 range. What else did we have? We've been talking about following Aaron's, and if the market was really going to take a big dump, I was kind of thinking that Aaron's would actually be pushing the highs out here today and not pulling back. It is pulling back, got a little lighter volume than yesterday, but again, no clear signal out of that one. ACAD Pharmaceuticals, when we look at this one, to me, this was one of these ones where you were saying, okay, it's going to come up here, hit this gap. Certainly did that yesterday and reversed right off the bat. But this gap down on the, 8.7. So, yeah, the 7th, or August 7th, on 4.8 million shares, got into it with 3.6 million shares. So a lot of these stocks have made their bounce. Some of these are headed back down. I'm not seeing a lot of these stocks that have reversed yesterday have the volume in there today. And it's not uncommon to see these things hit 1, 2, 3 times at these gap levels before they do roll over. But we'll keep an eye on it. We talked about, what else do we have out here? In GLS, Targa Research. Again, some of these stocks that I would think about shorting still need a little bit higher to go out here. Targa Research Partners, in GLS. A lot of these things just have gaps just a little higher. So even if you think bearish out here on some of these individual stocks, I would think that I want just a little bit more, maybe another buck or two in a lot of these that would get back up here. And of course, this one's just a little higher today, not a lot of volume, but I wouldn't pull the trigger until I saw at least some of these gaps. In the case of this one, it's a gap on the 4th of August with 1.5 million shares, doing about what today? About 1 million. So it's not off that far, but you've really been trying to chew through this heavy day that this thing had back on the 6th of August. But a lot of stocks are set up this way too. They've got these gaps where these things really started moving down. They haven't gotten back into those gaps where I'd have to wait for the risk reward to really start lining up. Any questions on FIT? You know, I'm not a big FIT guy. But I don't know. It seems to me like all these people that are running around, they need to find an easy, lazy boy, because I think they're going to get tired out after a little while, and that will be it. Do I have FIT? Is that the symbol for it? FIT? No. I probably don't have it in my... There it is, Fitbit. Give it just a second. You know, I know this is a kind of a recent IPO. There isn't a whole lot out here. You've got to really prove yourself, I think, in this economic climate. And I wouldn't be chasing a lot of recent IPOs out here unless you knew something definitive. But to me, these things are, in this case, this thing's in a trading range from about $42 down to $30. And I think it's probably going to bounce around there until they have a few earnings cycles and the underwriters probably get off this thing and you actually see what it's going to do. But that's the real problem with trading recent IPOs, is that you've had somebody manipulating the stock. They're paid to manipulate it. They're called underwriters. And it's very hard to figure out what happens after those guys are gone. I know there was a lot of discussion about Alibaba and their lockup being over on Monday, and Baidu and some of these other guys that were having more lockup times coming out. But, you know, what can you say about it other than you have to wait and see what these guys do? Just because the shares are available doesn't mean that they will be. But the next thing that you need to start looking at in Fitbit is when the IPO lockup dates are out on that. And I can probably look that up during the break. That would be the next thing I'd want to be looking at. And that is, what are they going to do? Chase people around? Don't know. I just think a lot of people are short and hammering stocks. But it's hard to say. What else do we have out here? HOS. Hornbeck Offshore Services. And again, we were looking at some of these stocks go lower on lighter volume. Would have liked to seen probably volume pick up to confirm these downsides. On Hornbeck, this is where I'm starting to look at the last low on the 24th, 1.2 million shares. Today we got about 838. We're going to have to see how this thing closes. Yesterday, 844,000 when it actually broke that 824 low. So again, maybe some, at least a little bit of signs that there may be some life in these stocks. And what do we have out here? Now, here is one that I was talking about, how many of these stocks have come back. Even if they've had small gaps, they've come back all the way up to that gap, pierced it yesterday, and then started turning back down. These would be much more interesting to me. This Kite Pharma, basically the energy off this last low from August 24th did have lighter volume by about 25%, 30%. So some of these things have given ABC down signs, but a lot of them have gotten down to these lows and had no volume. We'll be back in a minute as we check out how we're going to close out here today. Today, 1933 on the S&P cash, 1934. Doesn't look like we're getting any rally here.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. This coming Tuesday, September 22nd, Tom O'Brien will publish the 700th issue of his weekly newsletter, The Gold Report. It's amazing to think that Tom started his newsletter over 13 years ago when gold was trading under $300 an ounce. To celebrate the 700th issue, you can sign up right now at a 20% savings off the regular monthly price, and you can lock in that low rate for as long as you remain a subscriber. The Gold Report is Tom's weekly newsletter covering the gold market as well as a variety of gold mining equities. The Gold Report is published every Tuesday afternoon with a market update sent out to subscribers on Monday mornings. Tom will walk you through what's going on in the gold and metals market each week, as well as providing specific buy and sell recommendation on the mining equities themselves. Now is the perfect time to sign up for the Gold Report. The 700th issue is published Tuesday, and that's when this sale ends, so act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. And we wanted to talk about Fitbit. And, you know, if you go to the New York or the NASDAQ, even if it's a NYSE stock, and you go, even if you just Google lockup period, you'll find out what's on their site. It'll tell you. It'll say the lockup expiration date. So it's 12/15. They pretty much time that correctly, because it's going to be tough to go shorting a stock into very light volume at the end of the year. Of course, if you're trying to sell those, probably wouldn't be too happy, but you're going to get right into Christmas. I found that those are probably the best dates to have your lockup expire, because not a lot of people want to be shorting stocks going into that date. But, you know, you've got a while before those shares become available. But you've got, what, 36,000 shares outstanding, or 36 million, excuse me. So that will be a little bit, but you're probably I'm probably not thinking about doing anything with Fitbit until those shares became available to see what the insiders would actually do with it. Tata Motors. Some of these suppliers and are just getting bank shots, including the Indian car maker Tata Motors, TTM, down fairly significantly today, 7%. Basically, the whole chain from Volkswagen just getting a little pin action. Now, this has the high volume low from August 24th at $21.87 with 4.1 million shares. You're into that today with 1.4 million shares. And again, you can get volume here after the thing hits it, but at the moment, you're at least into that candle, the wick of that candle, on a lighter volume so far today. So great many of those stocks. On the upside, WFT. Weatherford International. Kind of a little bit of a reversal from yesterday's hammering. And it basically decided to do a 180. They were going to make a public offering yesterday. And after getting walloped, decided, maybe it's not the right thing to do now. And that's it. So they basically pulled the additional funds that they were going to get. And I got a little doji out here, a little bit of movement for the upside in this stock, up 7% on the day, with some decent volume. My guess is it doesn't matter now. They're just going to assume that they're going to come out and issue more shares soon enough. So this is probably headed back down to 721, the August 24th low. Let's see what else out here. Jack in the Box, one of these stocks that's up a bit. JC, how much time we got left? A minute and a half. Any other cars pulled at VW? Well, I don't know. It's the tough one to ask. You have to go check every car, which I imagine they're probably doing now. Okay, Jack in the Box. Nice little pop out here. Announced a 200 million share repurchase program. Not that big, but on a down day, kind of a little bit. And of course, food companies being pushed by the one and only Jim Cramer today. So that's probably not yet another reason why a 200 million dollar share repurchase actually did anything on this. But a lot of these stocks look like they're eventually going to come back, test these high volume lows. I just suspected that that was going to be in a couple of months and not in the next few days. But we'll have to see. 2.6 billion shares as we go. There's 1 hour left in the day. Certainly a huge, what are we going to be down? Billion and a half since the last time we were down here. So volume has contracted. That may not be enough, though. This is a very sour market. Dour. Anyway, see you tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.